Okay, so going back to the last concept that we have in chapter 4 is going to be talking about the difference between a cash basis versus an accrual basis. Okay? So the idea here is that when we are recording our transactions, we do have different methods that we can use to record our transactions, okay? We have the option to either record as a cash basis, which in definition is every time you make a sale, right? You're going to record your income when cash is received, okay? All right? And then you're going to also record any expenses when cash is readily available to be spent. Okay? When you have the cash in your hands and you give it to the vendor, that is when you are going to record that expense. Okay? Where on the different side is going to be the accrual type of accounting. Now, accrual, all right, is going to be determined as, okay, you're going to record your transaction, okay, when it has been earned, okay? So your revenues, especially your revenues and income, right? You do it when it's earned. When you sell your product, you've earned your revenue. And regardless if you receive cash or not. If you receive cash, great. If you don't, you can still record it. Okay? Whereas here, the same thing here for expenses, right? And any debt that is going to be recorded is also going to be recorded when the service has been completed. Or in this case, it's called incurred. When the service has been completed, whatever that you had that expense for has incurred. The day that it happened, the day that it was completed, it's going to the day that you're going to be recording it, regardless whether you paid or not. Okay? So in this case, right, when we talk about accounts or accrual, we're talking about accounts receivable and accounts payable. Those are things that where we say, oh, well, we still earned it because, we still sold our products. But at the end of the day, we didn't receive any money for it because it became an IOU. Okay, same thing here, right? We received a bill because a job has been completed. Now I owe them money and we didn't pay them yet. Okay, and that's our responsibility that we have to make a payment for. But you still recorded the transaction as it happened already. Okay, so that's the difference between cash versus accrual basis. Now, most cases, really small mom and pop shops, especially those food restaurants, normally would be on a cash basis. Okay, just because it costs money to actually have a credit card system, whether you're paying for the credit card system itself, but they also take a percentage of your sales, which we took a look in QuickBooks, right? That if we allow credit cards to be processed, right, that costs us money. So in this case, right, and then on top of that, as an accrual type of basis, maybe they can't afford to have people owe them money. They need the cash now. So that's why most mom and pop shops usually generally they're more likely to be a cash basis because they need that instant money. So then they take that money and then they purchase the items again in order to create the product that they're creating. Whereas an accrual type of basis, kind of this is for more businesses that have been in the process for longer terms, or it could also be a way of maybe they're a new company and they kind of have flexibility where they can allow their customers or clients to owe them money, and we obviously take advantage of owing people money. So once again, cash versus accrual basis, those are the two types of accounting systems that you could use to record your transactions. Okay? And in this class, we will be looking at an accrual type of business. Okay.
Yes.
So then let's go ahead and talk about an example here, right? How we are to record using cash basis versus using an accrual basis, okay? So the very first example here we have here is example, you are a contract worker, a construction worker, excuse me. You're a construction worker, okay? And your task is to build an office building, okay, for $50,000, okay? And the construction starts as of January 1st and is expected or scheduled to be completed by April 30th, okay? And then here, if the company pays you $50,000 on January 1st, okay, how would you record this transaction? Okay, so let's look on a cash basis, right? We received money even though the service has not been completed yet, but the idea here is that we received money for this service. Okay. So in this case, right, we would record the cash because we received it, and we were going to record the service in January, okay? Because that is when they paid me. Okay? It's not based on whether the job was done. That is when they paid me. Okay? And then in April, since I've already collected the money for this job, I do not need to record it again in April. Okay? This doesn't exist because they already paid me in cash for the service. Okay? Where if we look at an accrual type of basis, right? We haven't completed the job. The job is not going to be completed until April 30th. But we received cash in January. So in this case, what you're going to do is you're going to actually record what's called an unearned revenue or unearned service in this case, right? So we received the cash here, but here we're going to record as a liability because we owe services, okay? Where then in April, that's where we undo the unearned services and we claim that we did the revenue for the $50,000. Okay? So in this case, we're recording the cash, but we haven't recorded that the service has been completed. Until April, that's where we redeem that prepaid amount and then record that the service has been completed. Okay? So that's a difference when journalizing as a cash basis, right, versus an accrual basis. And that's just scenario number one. Okay? Scenario number two, what if I had the same exact situation except this time the company pays me $50,000 at the end of April 30th? Okay? How would I record this transaction? Okay? On a cash basis, in January, we record nothing, right? No cash was received.
No cash.
But in April 30th, when the job has been completed and I received the cash, that's where I record that the transaction has happened and was completed on April 30th. Okay? Now let's take a look at an accrual side. Same thing here, right? No cash was received, so no job was done.
No.
So no need for an entry in January. However, in April, since we received cash and the service was done, we journalized it like this. Okay? So that's the difference, looking at two different scenarios. So one of them was someone paid me in advance to do the job. Okay?
Yeah.
And then this one is where they paid after the job is completed.
After the job is completed.
And that's looking at how the difference between cash basis versus an accrual basis, right? You only record the service has been completed or the service is done when cash is received. Where in the accrual side, the idea is that when it has been earned, when the job has been done and completed, is when you recognize that the service has been completed. Okay?
Yep.
Okay. And that's it for chapter 4. So here I gave you the list of the 10 steps of the accounting cycle. We talked about the accounting period, which is when you schedule the accounting cycle to be completed, whether it's daily, weekly, monthly, or quarterly, or even yearly. Okay? We talked about the difference between calendar versus fiscal year. We also talked about the 4 characteristics of a financial statement. Okay, it must hold these 4 characteristics, right? must be reliable, must be relevant, must be comparable, and must be consistent, right? And then here we also talked about the generally accepted accounting principles, which are these 12 items here, which is your assumptions, your basic principles, and your constraints, okay? Now, here's a little study tactic or mnemonic device that I came up with, right? So, learning US GAAP is like learning your ABCs, right? You got your assumptions, your basic principles, and your constraints. Okay, A, B, and C. Now, for this class, okay, I will not be testing you on anything that has to do with constraints, okay? Because all of these things right here is more along the lines of managerial accounting, okay? This is where you need to make a decision. Is it going to, do you need to record it or not, right? Materiality, cost benefit. You're not the one that's making decisions on which one's the better outcome. And of course, your conservatism, that's going to be based on your cost management, your cost manager. Which one are they going to choose? And of course, having your industry practices, you're not the one that's comparing yourself to other companies. Okay, so for this test, for this class, I am not going to teach you or have you guys memorize the constraints. Okay, I'm not going to test you on that. However, I do need you to be able to recognize that there are 4 constraints, and then the 4 constraints are these 4 items here. Okay, I will be testing you on knowing the ins and outs, knowing the definition, knowing how to apply that definition in be able to apply it to a real life scenario is going to be your assumptions and your basic principles. Okay, so 8. I'm only going to test you on 8 out of the 12. But I do need you to guys to know at least 12 exists. Okay? Right? And last but not least, we talked about the cash versus the accrual basis, right? Cash revenues and expenses are recorded when cash is either received or cash has readily available to be spent. Okay? Whereas the accrual basis, right, revenues and expenses are going to be recorded when you either earned it, so when you either sold a product or or completed a service, right, and you earned it, then you record the revenue. The expenses is when when whatever that expense that you've incurred, right, whether it's a service or something that you purchased, right, has either been completed, you've been billed for it, and it's been done. Okay? So that's the difference between cash and accrual basis. Okay? So let's go ahead and take the next couple minutes to go ahead and complete the in-class exercises. Okay? So, number 1, what is the accounting cycle?
It's the methodical set of rules that was to ensure the let me see, to ensure the accuracy, and is the definition that you give? No, that's
Accuracy of accounting.
of a financial statement. And it's the collective process of recording and processing accounting events.
Okay, good. Financial statements. Good. I'm not going to add that second part there because that's not. No. I'm not. No, I'm not. That's good enough.
That's enough.
Okay.
Okay.
No worries. That's good. All right. Number 2. What are the 4 characteristics of financial statements?
Reliable, relevant, consistent, and comparable. Yeah, comparable.
Good. Okay. Number 3, what are the 10 steps of the accounting cycle?
So the first one is to collect the source of documents,
Mm-hmm.
analyze and sort the data information,
Okay.
record the transaction in the journal,
Okay.
post the entries in the general ledger,
Okay.
prepare the adjustment. No, yes,
Mm,
trial balance.
okay, so the unadjusted trial balance, yes.
And adjust the trial balance. Enter the adjusted entries.
Mm-hmm.
Adjust.
Okay.
Prepare the adjust trial balance.
Okay.
Prepare, no, create the, is number 8.
Mm-hmm.
Create the financial statement. You close in the books.
Okay.
And post closing trial balance.
Yep, post closing trial balance. Good. Okay. Number 4, what is the difference between calendar year and fiscal year?
So the calendar start on January 1st and finish on December 31st.
Yep, January 1st to December. Oops, sorry, typo. Where did my December 31st? Good.
And then the second one can start anytime, but it have to be the first day of the month and the last day of the 12 month after. I don't know how to
Mm-hmm.
explain that.
Good. What are examples of an accounting period?
That's the daily and weekly and annual and semi-annual. Those are
Mm-hmm.
the
Weekly, annually,
annually, for quarterly, whatever.
quarterly, so every 3 months.
Mm-hmm.
Okay. Okay, what does GAP stand for?
General accept accounting principles.
Good. Number 7, what are the 4 assumptions under GAP?
Is a business or economic entity,
Hmm.
going concern,
Good.
monetary,
Good.
and accounting period.
Yes.
Yes, there is not, or yes, there is.
You're right.
Mhm.
Okay, what are the 4 basic principles under GAP?
So the basic, oh, it is a historical cost.
Historical cost, good.
I think it's really a real realization or something like
Yeah.
that. Revenue
Uh,
recognition.
revenue recognition is more common instead of realization. So revenue recognition.
Recognition. Okay. Matching.
Matching, okay?
And adequate disclosure.
Yes, adequate
Disclosure.
disclosure.
Sorry.
Good.
Let's see, the other one in the constraint
Mm-hmm.
convention is materially materiality convention,
Mm-hmm.
cost benefits convention, conservatism convention,
Conservatism. Mm-hmm.
conservative industry practice.
Good. All right, number 10. Okay, so 10 through, okay, no, okay, so number 10 says, okay, under a
Mhm.
cash basis of accounting, revenues, revenues are recognized when blank is
Cash,
received. Yes,
cash.
cash. Good. Okay. And expenses are paid when blank
Cash.
is good. When cash is available to spend. Good.
The base.
Under the accrual basis of accounting, revenues are recognized when blank.
Earn.
Earned, yes. Okay. And expenses are recognized when blank. Mm-hmm.
Incur.
Incurred,
Incurred
yes. Yeah. It's the same base word as occur because occur happens right now, right?
mhm,
Incurred means it happens at that time.
at that time.
Mm-hmm.
Mm,
Okay.
time.
Number 12. Oh, so this is what we're from 12 to 16. I'm going to be testing you on your knowledge on the rules of GAAP. Okay. So, number 12 says under GAAP, which rule states that you must separate your transactions from personal and business?
Assumption. Assumption. No?
It's an assumption, but what kind of assumption?
Oops, that's I don't know. I didn't write it. I don't know. I don't remember. I just did yesterday, but I don't remember
Okay.
the one.
Look at your assumptions. And if you want to go back to that PowerPoint or look in your notes.
It's just don't know in my notes what are them. I didn't find it. Let me see. Basic principle. No, here it is. So what we said, what we
The question,
separated. Oh, is the first one is business and economy entity, no?
yes,
Separate.
good. Business and economic. This is the definition, right? You need to find a way to separate your business versus your personal transaction. Good. Okay.
Okay, now
Number
further.
13, okay? Under the rules of GAAP, which rule states that assets must be recorded at original price or fair market value?
So this is monetary, but I didn't write the
Mm,
same.
it's not
It's not monetary.
monetary. No, it's not because
No, which real estate asset record original price? No, doesn't. It's not monetary.
no,
I
it's not
don't know.
monetary.
So it's assumption. No.
It's not an assumption.
So that's all I don't have. It's a constraint convention.
Remember, I'm not going to test you on constraints and conventions.
So I don't. I don't know what it is.
Okay? Which,
It's not. I don't know.
well,
Which
look at your principles.
basic principles? A ver. Historical cost.
Yes, right? That rule states that you have to record your assets at historical cost, meaning the day that you purchase it, the fair market value.
Uh-huh. I just assume that everything that is cost is monetary, so that's the reason I
Okay,
didn't even think that's.
okay. When we talk about the difference between that one and monetary, monetary tells me, right?
Mhm.
What kind of unit of measure am I using? How
Yes.
do I record my transactions?
Hmm.
I record them in the terms of US dollar. In this case, I did not say anything about that.
About that, yeah.
Yeah, if I said I have to record it in terms of the United States dollar, then yes, that'd be a monetary assumption.
Mhm. Okay.
All right, number 14, under GAAP, which rule states that when recording a transaction, it must be in terms of value
Monetary.
or dollar amounts?
That's monetary.
This is monetary. Yes, cannot be recorded as a quantity or per item. So yes, this is the monetary assumption, right?
Monetary. Mhm. It's we have to say the monetary and which one of the three categories it is, or just
Mm,
monetary unit, or something like that, or
no,
nothing.
I'm gonna give
No,
just like I said, this one, I'm going to test you just the general
the
of,
general.
if
Okay.
you could just determine that it is part of the monetary assumption, that's completely fine. I'm not going to test you on specifics. I'm not going to test you, this is monetary unit, this is monetary
Mm-hmm.
measurement, this is monetary, this is stable currency. I just want you to be able to understand that
Which
this
one?
general rule here is for the assumption, for monetary assumption.
Mm-hmm.
Okay?
Okay.
Number 15, okay? Under GAAP, which rule states that when you have extra information that is pertaining a transaction, okay? Example, number of employees, wages and salaries, right? Cost of inventory. You must record it in the notes to the financial statements.
It's a constrain and modify convention.
No.
No. Hold on. 1 second. So it was in the principal basis. Historical cost, written. Is in basic principle?
It is a basic principle, yes. Now, which one?
Mhm. Record the basic principles and matching. No, is the fourth one.
What's
Ad- is adequate disclosure?
Yes, when you have extra information, you need to be able to post it to an area, not your journal, and that's going to be your notes to your financial statements. Okay. Last one here under GRAP, which rule states that revenues must be equal to all expenses?
That's an assumption.
No, it's not an assumption.
No, again. Shush, I thought I messed up everything yesterday. Okay. Matching. Is a matching? No, is
Yes.
in principle. Oh, basic principle.
Yes,
Shush.
not an assumption. It is definitely a basic
Oh,
principle.
matching.
Your revenues must match your total expenses. Good. And this is matching principle. Yes. Okay. So once again, it's a little hard. So that's why I said if you want to, you can print out those
The,
last slides and add your information in there. I know that a lot of students, they make their own study guides, so to kind of help them remember this information. But I will be providing another PowerPoint with just all the reviews
this
sections.
information.
All right, good job. Okay, that's it for today. So, any questions in regards to chapter 4?
No, oh, I'm good, more or less.